What if you could have this superpower of detecting fear in the stock market? Would it make you a better investor? Well, there is actually something that can tell you when there is fear in the stock market. Do you want to know what it is? The Chicago Board Options Exchange, or CBOE, Volatility Index, or VIX, also known as the Fear Index, is used to measure the nervousness, the fear of investors in the S&P 500, which is also known as the top 500 stocks in the US. For example, if the majority of investors believe that the stock market will go down, they'll put more money into options to reduce their risk. Options is basically another investment investors can use to invest in to hedge their risk. Okay, but we're not going to dive into that. Basically, when more people invest in options price increases, which increases the VIX index. So how does it affect the different asset classes like stocks, bonds, and gold? When the VIX index is high, this means that more people are fearful of investing in the stock market, which also means that more people will tend to be selling their stock instead of buying it, which will lead to a drop in the stock price. And when stock prices drop, usually people sell even more stocks, and they tend to either hold it in cash or put it into bonds and gold because they are safe havens. And when more people invest in bonds and gold will increase. Now, as more countries start to ease their lockdown restrictions and reopen their economies, many investors now feel a little bit more confident with the stock market, and that's why the stock market is increasing, and this has led to the VIX index to be decreasing. And that is also the reason why the S&P 500 is rising back to pre-COVID crash levels. However, if countries reopen their economies too fast, a second wave of COVID might reopen, and that might lead to a sell-off in stocks. So in my opinion, here's what you can do as an existing investor. If you're invested lump sum, you can lock in your profits from all your asset classes and put them into safe havens like bonds and gold. So if the stock market really crashes, at least the profits that you have from your gold and bonds, you can use it to reinvest back into the stock market at a lower price. Here's what you can do if you are investing monthly. You can either lock in your profits or you can invest monthly as long as you are well diversified across stocks, bonds, and gold. So if you want to receive more personal finance and investment updates, I share more in my Instagram and Telegram channel, which you can check out in the link below. Stay safe, stay strong, and stay healthy, guys. Bye-bye.